Martin Pring, president of Pring.com, joins us now on the line from Florida. Martin, thanks so much for joining us this morning. First up, I'd like to start off by asking you what really triggered the sell-off in global markets?
Well, I think you have to look at the bigger picture, and the bigger picture says that pretty well all the markets around the world are in a primary bear market, and most of them around the world are also in a secular, very long-term bear market. For the U.S., that secular bear market began in the year 2000. It's likely to continue for another 10 years. And I think India also experienced a peak in 2008 and is in a secular bear market. So things are very serious on a long-term basis.
So what do you foresee as the way forward from here? I mean, we saw a big fall that came in the month of August. Do you see a second wave of that happening going into October?
I really don't know. I think it depends how we end September. September seasonally is, in the U.S. at any rate, is the weakest month of the year. And as you're alluding to, October often provides crashes. But I think it very much depends on how we get into October. If we were to continue in the next week, as we've continued this week, then probably the market will be very oversold on a very short-term basis, and there wouldn't be the potential for a crash in October. But in any event, I think as I said before, I think the primary trend is a downward one, and the seasonality suggests to me that we're not likely to see a low until at least the spring of next year.
Okay, so let's get down to specific charts then. The S&P 500 is now back below the 1200 mark. In fact, just struggling with 1100 as we speak. What is the medium-term chart looking like?
In terms of the S&P, the chart looks like it's just a little bit above support here. But when you look at the Dow, it's broken down from what we in technical terms call a head and shoulders consolidation pattern, and it looks like it's headed lower.
What about Asia? Do you have the same view about Asia as well? Is there more downside?
Unfortunately, I'm looking at the Nifty and I see tremendous amount of what we call distribution, which is a very bearish factor, and it suggests the Nifty is going to at least go to 4,300, possibly much lower. Same thing with the Chinese market. Asia is not in any better shape. In fact, if you look at a relative strength chart of the U.S. relative to the rest of the world, it's actually rising, which means the rest of the world is going down much faster.
Before I let you go, Martin, I want to get you in on gold because of the huge volatility, and we've seen a sudden 100-day free fall in just one day. Which direction do you think it's going to take?
I think gold is headed lower over the near term. What we've seen is extreme weakness in the gold and the silver markets today. But I don't know that is enough, and I certainly know that that's not enough to rupture the bull trend in gold. We'd have to go much lower to cross some of the important moving averages, and that's not happened. So gold, I think, on an intermediate basis, obviously in a decline. On a primary trend basis, I still have to assume the trend is up, although it's a little bit shaky right now. People forget that gold, the only reason you buy gold is because gold discounts inflation, commodity price inflation. And commodities right now are in a primary bear market, and we're only in the early stages of that. So it's kind of difficult to call gold at this point.
Thanks, Martin, for joining us in what has been a very difficult week for the markets.